Does your company have a compensation plan that includes one or more fringe benefits that are taxable, like a company car or a monthly travel allowance? Watch this session as we discuss how to process this in payroll. When the lesson is over, you will be able to set up taxable fringe benefits as pays and process them.
Hey Gina, the project managers around here all get a company car to drive from job site to job site. HR just told me that this is a benefit and that it needs to be taxed. How do I process this in payroll?
Why don't we take a look? First of all, you should be aware that the IRS and Canada Revenue Agency have very specific guidelines on which commonly provided fringe benefits are taxable and subject to which taxes, and on how to report the withholdings. So before you set up and process taxable fringes in payroll, you really should review the IRS and the Canada Revenue Agency publications, or consult with your tax accountant on this matter to make sure that you are in compliance with the IRS or the Canada Revenue Agency.
That's good advice. Thanks, Gina.
During the year, you normally process these benefits with the employee's regular earnings.
What if we didn't do this? What can I do?
Well, you can process them at the end of the year as a lump sum without including it in the employee's regular earnings.
If we do this, can the employer pay the employee taxes?
The fringe benefit is subject to both employee and employer taxes, but there is a way to process it so that the employee portion is paid by the employer. I can show you how to do that.
Thank you, Gina.
Why don't we use your company car example and see how to process this fringe benefit with the employee's regular earnings during the year? What we'll do is set up the fringe as a pay ID so that the amount is included in the gross earnings and subject to taxes, but deducted from the net pay. How about if we call this pay ID Auto?
Sounds good to me.
We'll use company car as the description. Now for the pay type, we'll use Other.
Now there are some more checkboxes in this window.
Right. Select the one called In-Out.
Okay.
With an In-Out pay type, the amount from the pay ID is included in the gross pay and taxed, then deducted from the net pay.
Perfect. That's what we want.
Good. Let's finish setting up this pay. What do you want to use as a description for the check stub?
Why don't we use Auto? Nice and simple.
How about the general ledger expense account that this pay should debit? Since the amount needs to be deducted from the net pay, click Deduct. And enter the printed description for the deduction and what account number it should credit in general ledger.
I'll need to check with our accountant to see which account number he wants us to use for this.
If the pay should be costed to a job, assign the appropriate job cost information. How about the calculation method?
It's just going to be a flat dollar amount.
Okay, we'll leave it at flat amount. Which application should receive entries for this pay? Select that here. Is this company car benefit exempt from any taxes?
I don't know.
Some benefits are subject to only certain taxes and exempt from others, so be sure to check with your tax advisor first. For this example, we'll assume that it's not exempt from any taxes. I think we're done now. Let's save this pay ID.
Can we see how to process this fringe with the employee's normal wages?
Sure. I'll demonstrate with Enter Checks so you can see the calculations after we process the check. We'll go to Tasks, Enter Checks, and we'll use the time entry view that's set up for this database. We can leave the period begin date blank. Why don't we pick on Employee 102 this time?
Let's say Dennis worked 40 hours that week.
Okay.
So his regular wages are $1,200 and the car allowance is $100.
Okay. On the next line, Enter the pay ID for the company car and the amount. This makes the gross earnings $1,300. Let's process this check and look at the calculations. Look in the deductions area.
The amount for the company car is automatically deducted. Perfect. Gina, can you click Check Info so we can look at this more closely?
Okay. The total employee taxes are based on the gross pay of $1,300, which is made of the regular earnings and the fringe benefit. After the taxes are calculated, what's due to the employee is the gross pay less the employee taxes and less the fringe benefit.
This is perfect. You know, once this fringe benefit is set up, it's a lot more practical if we automatically include it with the employee's regular earnings each time.
You can do that. Just add it to the employee pay setup. Go to Setup, Employees. Bring up the employee. Click Pays. Then add it to the grid.
I see. Can I specify the amount here?
Of course.
And to automatically include this pay when I process earnings for Dennis, I need to make sure that the box Auto is checked.
That's not all. You have to remember to pick a calculation frequency as well.
Oh, that's right. That's what makes this pay automatically calculate when I process payroll, and select the calculation frequency that matches what is set up for the pay ID. Then the amount is included.
You've got it.
This is perfect. Setting up this will prevent us from forgetting to include the company car fringe benefit on his regular earnings. Gina, what about in a situation where we've already processed the last payroll for the year, but we still need to include the fringe benefit in the employee's year-to-date subject to and taxable amounts?
Well, let's take a look at this scenario. Again, we'll pick on Employee 102. Since we already have a check for this period end, we'll use another check sequence for this example. In this scenario, we've already processed the last payroll for Dennis, but we still need to account for a recognition award that we gave him earlier in the year. The pay ID for awards is also set up as an in-out pay type. Look what happens when we process this check.
Oh, it's a negative check.
Right.
Oh, because it's an in-out pay. The amount is included in the gross pay to calculate taxes, but deducted from the net pay. And since we have no other earnings for Dennis, the gross pay, less the employee taxes, less the amount, ends up with a negative dollar amount.
That's right. Let's take a closer look at the check. We can click OK to this warning. Click the Tax button to access the employee taxes that calculated for this check.
Can we see the total employee taxes?
Let's click Check Info.
So what do we do, Gina? We have no other earnings for this check, but we certainly can't process a negative check. What if our tax accountant or HR agrees to let the company take care of the employee taxes for this check? Can we process it that way?
Yes.
Can you explain how to do this?
If your tax accountant or HR agree to let the company take care of the employee taxes for this check, you can use a pay ID that has a pay type of reimbursement to offset the difference. Reimbursement pays add to the net pay, but are not taxed or included in the gross pay.
Okay. Let me make a mental note to ask our accountant which general ledger account I should use when I set up this pay ID.
Good thinking. The amount of the reimbursement pay should be exactly the amount of the employee taxes to offset the difference. And remember to process the check again. Let's look at the check info one more time.
That did the trick. It's no longer a negative check. And we've included the amount in the employee's year-to-date subject to and taxable totals.
Remember, it's a $0 check, so you probably don't want to waste a good check when you print it because it'll come out as a voided check. So you can click on the Manual button and assign a manual check number.
We should use a check date in the year that this should be reported, right?
That's correct. W-2s only include dollars paid during the year, and payroll totals are always updated by the check date. When you're done, click Accept Check and Finish.
You're a lifesaver, Gina. Thanks for showing me this.
You are so welcome, Brent. Now you are able to set up and process taxable fringe benefits.